All right, so let's begin the show. And today we have Meet Your Fund Manager segment where the fund category in focus is a multi-cap category and the fund in focus is Mirae Asset Multicap Fund. With me, I have Ankit Jain, Fund Manager, Mirae Asset Investment Managers India. Ankit, good evening and welcome to the Money Show. We'll be talking about your multi-cap fund. But before that, let's get an overview of the performance of multi-cap category this entire calendar year where we've seen mid-cap and small-cap beating the large caps, Nifty small cap going above 40% return, Nifty mid cap giving almost around 38% return. When it comes to funds, we've seen mid cap and small cap beyond 30% almost. So when it comes to a category like a multi-cap where you have a similar or uniform market cap exposure, what kind of a performance can one expect? How has the year been for this entire category, Ankit?
Yeah, hi, good evening. So yes, you are right. I mean, if you look into multi-cap as a category, clearly, I think good mix of large, mid and small cap. And since mid and small cap by TD has relatively outperformed by almost 28% large cap, right? So to that extent, blended average of return of this category also has been, I think, fairly good. And that is what, I think is pretty exciting about this category also, right? Over longer term, that with good mix of large cap, which is typically in any mandate, in any multi-cap mandate is around 45 odd percent, with I think 55% coming from, let's say, mid and small cap category. I think good blend of these two do offer a, I think, unique combination in terms of long-term better risk-adjusted return for the category.
All right, Ankit, let's understand your sector exposure. And talking about a multi-cap fund, we will also later on compare it with the flexi cap in the interaction. But then I want to understand your sector exposure when it comes to across market caps, large, mid and small.
Yeah, so if we look into our sort of a market cap allocation in this fund is large cap is around 41-42%, and then mid and small cap is around 28% each. As far as sectorally allocation goes, I think we have been positive on financials, consumer discretionary, autos, healthcare, utilities, and some of the new age businesses, right? While we are underweight on, let's say, IT, FMCG, capital goods, I think some of these sectors we have been underweight. So clearly, as things stand today, I think we have tilted our portfolio more large cap bias within whatever flexibility we are having by managing the mandate, because we believe that valuations are relatively more reasonable out there versus mid and small cap, where we have seen, I think, pretty good rally. And I think valuation in historical context is slightly on the higher side.
Ankit, I also want to understand your sector liking specifically in mid cap and small cap.
Yeah, so if you look into mid cap and small cap, do offer, I think, very wide variety of sector choices. And I think quite a lot of different sub-segments are there, and that is how I think bottom-up stock picking is even that much more important. But having said that, I think we have been able to pick and choose businesses across different various sectors. Right from auto ancillaries, and then maybe some of the IT, IT small cap name. In addition, I think incrementally we have been more positive on, let's say, cement and actually logistics as a sector, and we are finding, I think, relatively more opportunities in some of these names, particularly in the small cap area.
Ankit, I really want to understand the kind of sectors you are currently underweight on, but then in coming quarters, you might just want to increase your exposure.
Yeah, so see, sectors like IT, we have been a bit underweight. As of now, clearly given, I think, globally very high interest rate scenario, I think depressed bit of a demand outlook in the near term. But having said that, I think Indian companies time and again has exhibit pretty resilient, I think, business model, and have been able to grow, I think, consistently along with pretty good cash flow conversion. So to that extent, I think, in case if you look into now interest rate outlook globally, it looks like might have plateaued out. At least interest rate hikes. Hopefully, at the margin, maybe demand visibility might also start improving. In that backdrop, needs to be tracked, and IT sector may be underweight stance as of now might get reviewed in maybe future.
So, Ankit, I also want to understand now, talking about a multi-cap category, I think your fund was just launched in August. Since there are already existing fund of this category and you've just entered, what's going to be your strategy to beat not only the benchmark but also be the best performer in the category?
Yeah. So it is all about, I think, fund investment philosophy and typically how do we go about pick and choose businesses on bottom of stock selection basis. Typically top down at a sectoral level, our philosophy always remains to build a risk-adjusted portfolio, risk-adjusted diversified portfolio across different sectors. And then within that, try to pick and choose, I think, stocks which do offer better risk-adjusted return over longer time horizon. So I think with this sort of a construct, we have gone about building the portfolio, and we continue to believe. I think this remains the key sort of a bedrock. As far as the outperformance goes in the future, hopefully.
So now tell me one thing. Now, considering this entire category and the way it's performed, if I really want to diversify my portfolio, this is a great category to have. But then if I already have a large and mid-cap and small cap fund in my portfolio, how will a multi-cap add to my profit?
Yeah, no, so this is, I think, single category where I think pretty good combination of large, mid and small gets clubbed under single product. So to that extent, I think for any average, I think investor with slightly higher sort of risk, risk appetite, I think this single product do cater, I think need to almost what he would basically someone would like to have from the longer term standpoint, right? So and also I think we as a fund manager has got limited flexibility while managing this particular category because it is a very well defined, right? 25% each minimum has to be maintained in all of these three segments of the market, large, mid, and small, and then flexibility is only to the tune of remaining 25%. So I think a good blend of large, which is around 40-45% at any given point in time, do offer pretty good stability to the portfolio. At the same time, I think good allocation towards mid and small up to maybe 55-60% do provide the desired alpha over longer time horizon.
Right. Going ahead, Ankit, what is your sense of the market also? Specifically talking about large cap, do you think the large cap story is going to be back?
Yeah, no, so the good part has been that earnings growth has been fairly resilient and which is providing good support to the market apart from maybe flows and liquidity. I think that is also adding to the buoyant market. However, one has to understand that a large part of this earning growth is also backed by, I think, good margin expansion benefit because of, I think, fairly benign commodity price environment. And while at the same time, I think top line growth has not been that broad based. We have seen certain sectors firing well in terms of top line growth, but on the other hand, I think some of the other sectors has not been doing that great. So I think going forward, I think earnings growth outlook remains good, maybe mid-teen sort of a CAGR. Across maybe large cap, maybe low teens, maybe mid and small cap, mid-teen. But needs to be seen in the context of some of the headwinds also, right? Maybe globally things are still a bit volatile, might be improving at the margin. And some of the maybe front loading of capex might have happened into certain sectors. So I think given very sharp relative outperformance of mid and small cap, relatively, I think it is good time to really, I think allocate incrementally more money towards large cap, at least from the near-term standpoint. But overall, I think from longer-term standpoint, we continue to remain fairly constructive on the market, despite of valuations being at a premium versus historical average, because some of this is being backed by, I think, pretty good, strong, strong earnings outlook. And good part has been that quarter after quarter earnings are not getting downgraded, which used to be case earlier, right? So as of now, at least, earnings at a blended level are sort of holding up, which is providing support to the market. So I think longer term, we do remain fairly constructive on the market.
Interesting. Thank you so much, Ankit Jain, for being on the show today and helping our viewers understand about the multi-cap category and your specific fund. Time to slip into a quick break, but then before I slip into a break, I would want to leave our viewers with our WhatsApp number and our email ID where we keep waiting for your queries. 8657974571 is our exclusive WhatsApp number where you can send us your questions. And the Money Show at etnow.tv is the email ID where you can send us your queries as well. And once you send your queries, we will have your questions answered by our experts live on the show. See you after the break.